All right, friends, welcome. Welcome to the party. So checking in. We had some sound issues the other day. I want to make sure I'm coming through clear on this, but we're going to go live here and jump in and talk about what is happening with strategy and what some analysts are predicting with strategy. So I'm going to jump in just a second and talk about 11 of the 13 analysts and what they're talking about in regards to strategy and what their predictions are for strategy. And then we're going to talk about fiat currency today and how that's affecting other countries globally. And we're going to get a little bit into looking at what some of these analysts say about their price predictions for strategy. So if you would, in the chat box, let me know. We were having a little bit of sound issues before, so I want to know that I'm coming through clearly on this. Let me know if it's coming through clearly and that you can hear me in the chat box, okay? So I'm going to get in. I'm going to show this chart here, and this is different analysts on Wall Street. And so this is basically a chart that is so I think if we're having I wanted you guys to check in if you guys are listening on this, see if you can hear me clearly because it's showing that it's unstable here, this connection line. Okay, so anyway, I'm going to jump in and start this anyway and just jump in. So basically what we're looking at here is what are different analysts saying about so there's some predictions that are coming in over the last about couple months from these different analysts. And when you look at what 11 out of 13 analysts are saying in regards to strategy, they're calling it a strong buy. And that's as of a couple days ago. And a couple days ago, these analysts are saying strong buy. And there's about one that's saying a strong sell, and the other one is in moderate viewpoint of what should be done with strategy. So I'm going to take a look and pull this up here. Let me know if the connection's standing because the sound wasn't working for a second. But if you look here and you can see what's happening with these charts, this is what the different analysts are saying in terms of their prediction. And you see a strong buy about 3 months ago. You had these different analysts saying strong buy, and it was 4.91. So a strong buy would be considered a 5. And 3 months ago, the rating was 4.91, where a high degree of people were saying strong buy. Then 2 months ago, if you look in this box here, you're seeing 2 months ago, the rating was about a 4.58, still a strong buy, but that's because you had other analysts popping in and saying, one was saying at that time that it's a strong sell. So if you look at the graph down here, 3 months ago, it's pretty much all green. And we got 10 saying strong buy and 1 a moderate buy. 2 months ago, we have 10 saying strong buy, 1 moderate buy, and then you can see the red pie a slice here of a strong sell. And then we see also 1 month ago, we see 1 month ago strong buy as well. But you still have one person here who says a strong sell. So now you got 13 analysts in the game. So the first 3 months ago, it's 11 analysts. 2 months ago, it's 12 analysts. 1 month ago, it's 13 analysts. And so overall, if you look at the current overall sentiment of these analysts, strategy is a strong buy at today's current pricing. And this chart was done about, or at least this article was written a couple days ago. So this chart is pretty current. If you look here, up through June, past June 9th, and the pricing around 382. And so when you look at the close of this chart here, this is June 16th. So this is very recent predictions coming in from analysts on what they think is going to happen with strategy. So pretty cool, right? Keep letting me know if the sound is coming through. Okay, I want to make sure you guys can hear me all right. All right. So that's what's going on. And I think it's fascinating to take a look at this. Now, if you look at some of the predictions on this here, we're looking at a high target to the left of 650. So there could be a run up as high, according to these analysts. One was saying, or a couple were saying as high as much as 73% it could run from here. So 73% would be, over, call it roughly a 280 increase. So you're looking at more like, the price could go to about 650, 660 with a 73% increase. from here. And that's what some of the analysts are saying. Overall, the high target's 650. The average target is 534, and somebody has a low target in here of 175. That's the one person who thinks the strategy is not a good buy right now. Now, where do these predictions come in from? What's the credibility of this? So I'm just going to give you a little breakdown because I did some research and go, like, so who's predicting these price points for strategy? So I'm just going to give you a little perspective on it. So you have different analysts on Wall Street that will constantly analyze the stock. And so you get people like JP Morgan, you get the Bank of Americas, you get the Raymond James, the Barclays, the Goldman Sachs, the Morgan Stanley, the Bernsteins, the TD Cohens. These are the different type of analysts that are predicting this. And they do pretty thorough research on it. They model MSTR's balance sheet, their debt strategy, their Bitcoin holdings. And so this is not coming from people who are not sophisticated in Bitcoin and MSTR. So they got a pretty good understanding of Bitcoin. They got a pretty good understanding of strategy, and they do look at the different balance sheets in their debt structure. They do also look at Bitcoin yield, and they incorporate that into their price predictions. And they look at the Bitcoin holdings that strategy has. They also look at the structure of the company. They also look at what kind of capital they're raising. So this is not coming from, Joe Schmo on the street. This is coming from guys that are pretty intelligent on this. So when you look at the graph, and I removed it, but let's take a look again. So when you look at the graph on this, you can take a look at this. And if I were in a situation right now, and let's say I was investing in strategy, again, not financial advice, not tax advice, not legal advice in this show. But if I was investing in strategy and I was looking at today's price point here around 382 or 370 something, whatever it closed at on Wednesday, I would be like, okay, great. There's some analysts that are on board on this. And I think it's good to look at a time like now where people get concerned, and they're like, wow, it's chopping sideways. We know that there's people like Chanos who are shorting the stock. And, you got news going on with political tensions, war tensions, and sometimes the environment can make people feel uncertain about what's happening with this stock or what's happening with Bitcoin. And you do a little research, you find out that Wall Street analysts think it's a good buy. And not just a few of them, just like literally recently, this is the most recent prediction, lower right here, strong buy based on 13 analysts. 11 think it's a strong buy, and one is calling it a moderate buy, and one's a strong sell. So, I would feel pretty good if I were buying in and I had bought in at this price, say 370. And the bulk of my buys of strategy came at when strategy was at $79, when strategy was at $100, $120. So the large percentage of my portfolio is strategy at a very low price. But I did buy in a bunch of strategy at, around the 330 price point, and I even bought some recently. So if I'm looking at my most recent buys, I'm taking a look and going, hey, based on these analyst predictions, the average target is 534. So if you look at that, strategies at a 382 to a 534, that's like a 40% increase from here. And then the high target could be 650 based on these analysts. So that's like a 73% increase. So, this is good stuff to look at. So you're not in a position where maybe you're thinking this is a bad move, or like, you already made the move and you're feeling like, oh my God, like what did I do? Or did I buy in too late, or what's happening? And so it's always nice to look short term, what people think. And I think it's nice and it's reassuring to people who research this every day, large investment firms, large research firms. They're the ones who are quoting these price predictions. And the general sentiment of these Wall Street analysts is very bullish on strategy. And so I feel good about that. I've been bullish all along, but I feel good about that to get an outside perspective of somebody who may know what they're talking about. And it appears based on the research they do and how credible they are, that they do know what they're talking about. But again, nobody knows what the future holds, and nobody knows where the prices are going to go. But the sentiment in the marketplace currently might be a little bit wishy-washy of how people are feeling, but overall, this is present day analyzing of actually what some analysts think. So it's food for thought, and it's something to look at as a data point. It's not gold. It's not like you're going to base your whole financial future on it, but it's always interesting to pull data points of what other people think and other people might be looking at. Okay, so there you go on that. Just a little bit of food for thought. Now we're going to zoom out and take a look just at the bigger picture. I'm going to share some thoughts from Michael Saylor and some interviews that I watched from him recently, and we're going to take a look at fiat currency. I wanted to show a little bit on the price today because it's a day where the markets are closed and people are wondering what's going on, and figure why not look at some charts, look at some data. You do your own research, not financial advice on this, not tax advice, not legal advice, just pulling a little bit of data to give everybody another point of view. Okay, so let's jump in and take a look at the viewpoint of the global perspective and look more macro on what's happening and look at this more long term. So looking at things long term, we take a look at Saylor's viewpoint on this, and he says the supply of dollars expands about 7% a year. And the scary part is, and this is a quote he recently said in an interview that he did a little while ago, he says, if you put 100,000 in a vault in 1930, today it would only pay 8 weeks of property tax. The point is, your money loses power over time, a lot of power. A fortune from nearly a century ago now barely covers basic expenses. So there's a dramatic loss in purchasing power as it relates to the dollar. And I'm going to share also how that relates to other currencies as well, other fiat currencies. So your wealth is cut in half every 10 years if you hold it in cash. And, that's kind of like you have a cookie jar full of 100 cookies, and in 10 years, there's only 50 cookies left. It's like, what happened, right? Lost 50 of my cookies. I lost 50%. So it's the silent erosion of wealth that's the killer. And obviously fiat currency has that negative effect. And saving in cash, you can't preserve your wealth for long periods of time in fiat currency. I think we all know that. It's a quote from Saylor. Your dollars may stay in your account, but their actual value keeps disappearing. Now, a lot of people in the world, they don't understand this. They don't know this. People who are informed that are watching this channel and watching other things on YouTube and have been following Bitcoin and strategy for years, they understand this, but the great majority of the world does not understand this concept. So government money, that's fiat currency, means government issued money like dollars, pesos, or rupees. So you look at that as point number one. Point number two, you take a look at the dollar advantage. The US dollar stands as the world's strongest fiat currency, as we know. Yet even this global leader suffers from fundamental flaws. So now you look at the dollar, and the dollar loses 7% of its purchasing power every year. But when you look globally in weak currencies like a Turkey or a Venezuela, inflation hits 28 to 30% yearly in some of these places. And so in some of these countries, their savings can vanish in just 2 to 3 years. So that's why Bitcoin is where all capital, or lots of capital, I should say, or the smart capital is going to flow. It's going to flow into Bitcoin, because look at the second and the third and the fourth and the fifth and the 10th and the 20th best compared to the dollar. I mean, it's not doing so hot. So most of the world has already lost their money. If you're from Argentina and you're 30 years old, you've already lived through hyperinflation. So if you take a look at the Argentine peso lost against USD since 2010, it's 95% of its value has been lost since 2010 against the US dollar. So you have countries affected, nations experiencing severe currency devaluation, and the average annual inflation rate, if you look at the annual inflation in other countries and economies, and developing economies, it's 15%. So it's really high, right? So, people who are holding their money in fiat in other countries are in a worse position than people holding their money in dollars. But whether you hold it in dollars or fiat in pesos or what have you, it's still a losing game. And so even safe countries can't escape So global currency collapse, the currency collapse in Venezuela, Argentina, Brazil, Russia, Cuba, and every country in Africa. So currencies collapsing is not a new thing at all. And America is not immune to it. Even in America, the dollar lost 99% of its value in the last 100 years. So depending on what statistic you look at, some say 97%. Here he's saying 99% per Saylor. So the leaky bucket, living in a safe country does not protect your wealth. So just because you live in America, or just because you live in London, or other cities or countries around the world, or the UK, it's living in safe countries doesn't protect your wealth, and that's the bottom line. So your savings drain slowly, and a lot of people in times of fear where the economy is uncertain, or there's political unrest, or there's wars, a lot of people, they're trying to be safe with their money and keep it in cash. But if you zoom out and look at this from a long-term perspective, keeping money in cash just loses money every single year. And that's just the bottom line. So there's no escaping that. So Bitcoin is a bank that won't steal from you. And the real promise of Bitcoin is very simple. It's a bank in cyberspace that won't steal your money, per Saylor. This is a Saylor quote. So you have traditional banks. Your money silently loses value through inflation and fees. You have the Bitcoin alternative, which is like a digital fortress where your wealth remains truly yours. And then you have true ownership. You don't have a middleman. You don't got governments just coming in and confiscating your assets and confiscating your gold. And, you don't have this problem when you're in Bitcoin. So unlike fiat currencies designed to lose value, Bitcoin operates beyond the reach of inflation. And that's a really important point. If you take a look at fiat losing 7% of its value as it relates to the dollar, other countries more, every single year, and you look at even other assets out there like gold, where the amount of gold that's mined every single year is between 1.5% and 2%. Let's say it's 2%. Gold loses 50% of its value in 35 to 36 years. So even holding one's money in gold is not exempt from inflation. But when you look at Bitcoin, over time, Bitcoin is, because Bitcoin has a finite supply. And so over time, as other assets are losing their value and their purchasing power, Bitcoin will go up. And if the dollar keeps getting worse and worse and worse, and then you compare Bitcoin, and let's say Bitcoin goes to $1 million one day, $2 million, $3 million. I'm not saying this year at all. I'm not even saying 2028, but let's say it happens one day. So if Bitcoin goes to $1 million one day, $2 million one day, you really start to compare Bitcoin then to the value of other assets in the world. And if Bitcoin is gaining in value and gaining in strength because it's not subject to inflation per these other assets, or compared to these other assets, then Bitcoin will grow and grow and grow in value, and other assets will weaken every single year in value, such as fiat currency, such as gold, and Bitcoin will get even stronger than people think because of the properties of Bitcoin, which clearly fiat does not have those properties, and gold does not have those properties at all either. So there's the story. And if you look at gold, you lose 50% of your value of gold in 35 years. You take another 50% off in another 35 years. So in 70 years, gold's losing 150, gold's losing a large chunk of its value in over a 70-year period. Okay. So those who put their money in gold, yeah, sure, gold's done well. If you look at the rates of return of gold compared to Bitcoin, I think over the last year, I think gold's 44% and Bitcoin's 50-something%. So Bitcoin's still beating it. Gold's done extremely well. But if you look at the nature of holding the asset long term, it doesn't compare to Bitcoin. And the properties don't compare at all, even close. So that's that. If you're just joining us, I will show you at the end just a few charts on some price data that, you can take it or leave it on the data I'm going to share, but it's just interesting to look at other viewpoints for MSTR. Okay. So the digital vault, no one can breach. You have unbreachable security. So Bitcoin creates a digital vault that even governments cannot break into or control. That's the power of Bitcoin. Every transaction is stored forever. Think of it as a digital notebook. That's what the blockchain is. It's a digital notebook. And so It can't be changed, can't be manipulated, and that's the beauty of it. And after we saw the crisis of what happened in 2008 with companies like Lehman Brothers and other organizations that were involved in these junk mortgage securities that were sold, and they crashed, and then they had to be bailed out. They were bailed out with our tax dollars, And so when you start to look at the manipulation of balance sheets, the manipulation and lies that go on in the current system, the beautiful thing about the blockchain, what I call the digital notebook, is once the transaction's in there, it's stored. It can't be manipulated, can't be changed. So there's transparency that's in there. And an incorruptible asset. Your life savings remain safe from debasement or corruption in Bitcoin's secure network. And that's a huge, huge point. It's an incorruptible asset. You hear Saylor talking a lot recently about building an indestructible balance sheet for MSTR. And, he's building this balance sheet, and he talks about it from the perspective of the way that he buys Bitcoin. Now, they're acquiring Bitcoin on the balance sheet, but one of the ways that makes it indestructible is their preferred stock that they're gobbling up, where they're going to get, they're raising money through this preferred stock and they're buying Bitcoin, but he calls it an indestructible balance sheet because they're acquiring this Bitcoin and they don't have to pay out. They do pay out these dividends over time to their investors, but these are not like loans. Preferred stock is not a loan. So when you do convertible debt, it's a loan, right? That has to be paid back. Now, if it's converted into stock in the future, it doesn't technically need to be paid back. But when you're doing these convertible arrangements, sometimes, not sometimes, there is a payoff period with these, like they last 4 to 5 years, where sometimes the debt is repaid in a 4 to 5 year period. And in this situation, that in a convertible bond, it's converted into stock. So they have the option to convert it into stock, right? But typical structures when you have convertible debt is like, or you just have loans that you take, you got to pay a loan back. And so when you have to pay a loan back, it's a different structure than a preferred stock, where you're not paying the money back, you're paying a 10% dividend every single year. And so that's what's happening with these preferred stocks: 10% on Strike, 10% on Strife, 10% on Stride. Actually, on Strike, it's 8%. On Strife, it's 10%. On Stride, it's 10%. So that's why he calls it an indestructible balance sheet, because you're just paying dividends every quarter. And the beautiful thing about Stride is if he misses a payment on Stride, he doesn't actually have to pay it back. So it's like he can skip a payment and then pay it out the next quarter. So it's pretty powerful what he's doing with this preferred stock. So as Bitcoin is an incorruptible asset, where your life savings remain safe from debasement, Strategy is calling what they have an indestructible balance sheet, acquiring Bitcoin with these preferred stock methodologies. Okay. Historic first. Never before has humanity had access to truly fair, secure, and immutable digital wealth. Okay. So obviously this is a historic moment with Bitcoin, and people are just getting used to it. And most people don't even understand Bitcoin. There's a chart I'll show at the end that's been shown before. You've probably seen it floating around the internet, but it says about 1 in 100 non-Bitcoiners actually understand Bitcoin. So if somebody doesn't hold Bitcoin, that means the estimate is about 1 in 100 people who don't hold it don't understand it. So like the people who hold it understand it. People who don't hold it, you have like 1% of them that actually understand it. So we got a long way to go, right? Long, long way to go. So there you go on that. So you got build your house on rock, not sand. So let's just look at the sinking foundation versus the solid foundation. So cash savings are like, building on mud. Your financial house gradually sinks. And the solid foundation is Bitcoin offers the granite rock your wealth needs. It offers stability in digital form. So this is, these are just comparisons. They're kind of basic 101 comparisons, but they're fun to look at. And dollar versus Bitcoin. So if you look at this and you look at the dollar's path, 0% growth rate annually, predictably flat performance with 0% volatility, and value slowly erodes through inflation. But then you look at Bitcoin's trajectory, Bitcoin, 60% annual growth. And who knows what it'll do over the next 4 years, 10 years, but what if it grows 60% over a year over the next 4 years? What if over the next 10 years it does 30%? It's still no comparison to the dollar. So this is really just zooming out and looking at it from the perspective of long-term thinking on this. You know, we can look at prices and what's happening in the market today and what's going on with the wars and what's going on with politics and all kinds of stuff like that. But we can zoom out and look at, you know, what is happening with Bitcoin and comparing it to the US government and the dollar, or comparing it to the fiat in your country. And you just do a side-by-side comparison. It's like, where is one's money better off? Is it better off in the dollar and fiat, or is it better off in Bitcoin? And for me, that's a simple answer. Okay. Standing still while others race forward. So if you have cash 10 years from now and you have $1 million in cash, you still will have $1 million. So you hold $1 million for 10 years, you got $1 million. But if you hold Bitcoin, you could potentially double your Bitcoin every 18 months, depending on what the rate of return is. Right now, this is over longer periods of time. So if you look at the rule of, you know, let's say Bitcoin does 30% a year, right? So rule of 72, if you take your rate of return, so let's say you have a 10% rate of return and you divide it into 72, like your money will double every 7 years. So if you have a 30% rate of return and you divide it into 72, your money will double every about 2.3 years. So in this scenario, it's assuming a higher rate of return on Bitcoin and your money doubling every 18 months. But if you think about that right now, I mean, your money doubles every 18 months and then another 18 months. So somebody has $100,000 in now in Bitcoin. 18 months later, it could be, you know, 200,000. 18 months later, it could be 400,000. 18 months later, it could be 800,000. 18 months later, it could be, and you could go on and on with this. So in 10 years, you have the potential of, it could be $10 million if somebody has $1 million invested in this. Okay. So again, this is just hypotheticals, not financial advice, but it just shows you the power of, like, wow, Bitcoin versus the dollar. And then you could even compare it to traditional assets. Like, let's say, you know, you're talking to your grandfather or your father and they're like, yeah, I'm going to get my good 8% or 10% rate of return over the next, you know, 10 years. And you go, great. So let's look at your rate of return. If you get a 10% rate of return over the next 10 years, you know, what would your money be at? And then if you get a 30% rate of return in Bitcoin every year over the next 10 years, what would your money be at? And so that's why Larry Fink talks about, you know, every person should have 2% of their portfolio in Bitcoin. And so, you know, whether one believes in Bitcoin or not, or knows about it or not, you know, more and more people are discovering it. And, you know, somebody should have at least a portion of their portfolio into Bitcoin to counteract these, you know, problems with putting money in cash, or even just putting money in the stock market, earning 10%, you know? So earning 10% over time, when you factor in taxes, when you factor in inflation, when you factor in monetary debasement of the currency, when you factor in credit card debt, if somebody's earning 10% in the stock market over time, they're probably earning more like 2% or 1% when you factor in all of that. So, you know, that's the real rate of return on one's money when you really look at it. Now, obviously, you have to look at it for your own situation and go, great. So if I have 10% in this, and then eventually I pay taxes on it, you know, what's the real rate of return on that? If I have monetary debasement and the government's printing 7% more money every year, or 6.5%, you know, what do I have to earn to get ahead? And then you can look at also, like, what are the debts that one has that they're paying on credit card debts, or loans that people got during COVID per se, and they're low interest rate loans, but they're 3 or 4% or 5% or 6%. So you have to look at the rate of return on all your money. And when one starts to look at that, they find, oh, there's this debt over here, and there's this debt over here, and then there's 10% in the stock market, and you add it all up, and it's like, wow, I'm actually negative. I'm negative in my ROI. So it's really important to look at the rate of return on all of one's money, not just I'm doing 10% in the stock market, and because I was told 20 years ago that that's a really good thing, I'm just going to stick to that and believe it. And then if you add in your management fees, like a 1% management fee, you're not earning 10%. You know, over 30 years, a 1% management fee can wipe out 28% of your wealth. So you really got to look at everything. And this is a great scenario you could put to the left here, where we're looking at cash $1 million, and in 10 years, cash is $1 million. But to the left column, you could put like, yeah, okay, invest in a stock, $1 million, or $1,000 in a stock, or $10,000 in a stock. And where is it 20 years from now at 10% versus money in Bitcoin 20 years from now at what, 30% a year? You know? So it's really an interesting thing to look at for anybody to take a look at the scenario, even people who don't understand it yet, to do a side-by-side comparison. So you got volatility, the price of freedom. This is what a lot of people don't understand. I think it's important to look at this because you'll have people say, you know, Bitcoin is too risky, MSTR is too risky. Sure, I get everybody's in a different situation, but you've got the roller coaster effect. Bitcoin's price swings dramatically, and this is volatility, not risk. And so Saylor says volatility is not risk. A roller coaster is volatile, but only risky if you fall off. It's a great quote, right? So volatility only becomes risk when you jump off. So that's staying strapped in, right? So you're on the roller coaster, staying strapped in. Volatility only becomes risk when you jump off. Patient riders reach the destination. And then long-term vision, this is a good perspective to have now if you look at long-term vision, because short-term fluctuations fade when viewed through the lens of years, not days. You know, these are some of the principles that Saylor talks about, right? So you're looking through the lens of years, not days. So if you're looking now in the month period and you're seeing the volatility of strategy or moving sideways or Bitcoin over the last several months, you go, oh my God, this is a roller coaster, and you're on the roller coaster. And what Saylor's saying is stay strapped in. He's saying stay strapped in. And with a long-term vision, short-term fluctuations fade when viewed through the lens of years, not days. So this is stepping back, zooming out, and going like, what is one looking at for their future over the next 4 years, 10 years, 20 years, not just the next 6 months. Now, that doesn't mean me personally that I'm not going to take some profits over the next 6 months, but I also have a longer-term horizon as well on the investments that I hold. So volatility, a feature, not a bug. By design, Bitcoin's price swings aren't flaws. They're essential to its growth mechanism. So again, Saylor says volatility is a feature, not a bug. Growth engine. The same volatility driving short-term fears fuels long-term exponential gains. So you have people in the short term and they don't want to get in Bitcoin, or they don't want to get in strategy because they have the short-term fear and it goes up and it goes down and you lose a huge percentage of your portfolio. And yeah, if you look back at the number of drawdowns with Bitcoin, I mean, you can count more than 380% drawdowns, or at least 380% drawdowns with Bitcoin over the last several years, right? So you can definitely count that. So there is volatility, but those who look at volatility and have short-term fears driving them, you know, are losing the game, versus these short-term perspectives. You know, you have to look at this volatility that it's actually fueling long-term exponential gains. And then per Saylor, you know, when you look at the strength builder of this, each market cycle strengthens the network. So volatility weeds out the weak hands. It weeds out the weak hands. So this is a game, you know, I've been in this game with Bitcoin since 2018. Been following strategy since 2020. Bought my first shares in 2020. Did not hold on to them, and then bought back in 2024 in February. So you know, I've been part of the journey in the volatility for the last 7.5 years. And so when you look at it, it's just like it's getting used to it. So this is not financial advice for anybody, but if I was talking to myself, you know, 6-7 years ago when I first got in, I would be reminding myself of these principles of like, yeah, this is volatility, but this is what the asset is. And this is why I wanted to own it, because I wanted the volatility, because I wanted the upside. And so I would be reminding myself as a newbie 7 years ago into Bitcoin that, hey, volatility is coming. You're going to have your ups and downs. You're going to have your drawdowns. But those who hold, you know, eventually the weak hands get weeded out and the people will hold and have the diamond hands, the gold hands, the digital gold hands, whatever you want to call them. Those are the people that win in the long run. And so this is about long-term horizons of looking like, what is the future of this world and economy going to be in finance? in the next 10 years. And Bitcoin is going to play a major, 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 major role in it. And it already is. So I got to get on the phone and talk to some family members, because there's some family members that I want to put some more money into Bitcoin, okay? Just to help them in their older years. Bitcoin is like physics. And yeah, nobody's too old for this too. My stepfather at 82 or 81, we got him into Bitcoin, my brother and I, okay? So we orange pilled him. He still has it. When it hit, $100,000, he was like, I'm going to sell some of this out, and I'm going to take a trip to wherever the hell they were going to take their trip to. I said, no, do not sell your Bitcoin. My brother and I were like, do not sell your Bitcoin. Go sell your dirty fiat that you hold. Get rid of that. Take some money out of your stock account, sell that, and go on vacation. Hold your damn Bitcoin. That's me for my stepfather. Not anybody on this call, but for my stepfather. Make sense? So the economic gravity of Bitcoin. This is a great, I love Saylor because he's so based in math and science and data, and that's the brilliance of him. But he's also into he's kind of has this poetic side to him as well. And the way he sees things through metaphors is brilliant. So when we look at this, he gives a metaphor here, and he talks about water. And he says, the water, all the world's money seeking value and security, like water. Capital naturally seeks the path of least resistance. And then he talks about the flow. He says people moving their money into Bitcoin as inevitable as gravity. So bottom line is people are going to be moving their money into Bitcoin. It's already happening. No government or bank can permanently prevent this natural movement. And then he says electricity, he goes to the electricity, the power generated becomes wealth, freedom, and protection. Those who build their dam early capture the most potential energy. So he's talking about a dam here, right? And water. Economic gravity pulls money toward better assets. Just as water flows downhill, capital flows to superior stores of value. Beautiful thing. So Bitcoin is the superior store of value. And yes, gold is a store of value. It's just not the superior store of value. It's just not. There is not really much of a comparison to make. And I love what Saylor says, in one of his interviews years ago, where he said, wooden ships were a good idea until we developed steel. Or it was great, back in the day when you could bring bow and arrows to a fight, and then they invented guns, and you didn't want to bring a bow and arrow to a gunfight. So like gold's kind of like bringing a bow and arrow to a gunfight. I'd rather have the gun. So here you go, right? Why Bitcoin keeps going up. So high energy state. This is again, let's just go to the quote here from Saylor first. He says, capital is economic mass. It's flowing from a high energy state to a lower one. Michael Saylor. High energy state, broken currencies, overvalued real estate, and corrupt markets store economic energy inefficiently. It's powerful, right? Look at that. Overvalued real estate, corrupt markets. I mean, take a look at what happened in COVID, right? I mean, what happened to, the business down the street? What happened to the salon owner? What happened to the restaurant owner? What happened? They got shut down. Main Street got crushed. And what happened to Wall Street? What happened to the Wall Street guy on his phone sitting by his pool during COVID? The markets went up. It printed all that money, and asset prices went up. Asset prices rose while businesses got destroyed. So when you look at these markets of overvalued real estate, corrupt markets like the stock market that was pushed up with all the money printing that was put in, right? These are high energy state. These are economic energy inefficiency states of value. And so when you look at natural movement, capital, like water, naturally flows downhill toward more efficient storage systems. And what's the more efficient storage system? Bitcoin. So in the low energy state, Bitcoin's mathematical certainty creates the ultimate energy sink for global capital. So global capital is just going to pour downhill, and it's literally just going to sink into Bitcoin. Because it's going to go to the superior asset. This weak capital, this corrupted capital, it's going to go to the superior asset. Look at what's happening with the bond market. Saylor's competing with the bond market, and he's gobbling up a very small percentage of the bond market right now in the fixed income market. But his goal is to gobble more and more of it up. Why? Because he's backing his play with Bitcoin. He's backing his play with Bitcoin. You couldn't have a stronger balance sheet to back your play with. That's what he's doing. So this is good too, the phase of monetary evolution. This is, again, with the physics side of Saylor that we love. And he talks about the steam phase being fiat currency, unstable, rapidly expanding. You got central banks that are printing endlessly of money and creating a monetary system that disperses value, right? So the energy is dispersed. It loses energy. And then you have the water phase. And so the comparison for the steam phase is like fiat currency, total dispersal. And then you have the water phase, which is like gold, more condensed, more stable. Physical precious metals contain value, but they're able to be manipulated, is what he's saying. And they're difficult to transport. Because you can manipulate gold, right? Who knows what's happening with gold, right? You could mine up gold and people could be storing away in vaults. There could be more gold than we think. We don't know. I mean, look at how the diamond market was manipulated. So the gold market could easily be manipulated. And it's difficult to transport. And then you've got, crumbling foundations and how the world's recapitalizing, meaning taking capital and putting it into different types of assets like Bitcoin. And so you have crumbling foundations, which is clearly our traditional financial system. Fiat currencies are debasing, they're deteriorating. If you're just joining us, I shared earlier of like how it's affecting countries like Argentina and all different kinds of countries around the world, and how, they're losing way more than 7% debasement a year, 28, 30% a year, and more in some years. And then you talk about rebuilding wealth. And Saylor's quote is, I want to see the entire world recapitalize in Bitcoin. Secure structure. It's like moving your savings from a leaky shelf to a locked treasure chest, period. So why is Bitcoin so special? We all know this. We've heard it a million times before, but it's always good to revisit the basics of stuff, because when one understands Bitcoin, they understand strategy better. And when one understands that we're going to run through uncertain economic times in a country like the US that has ever increasing debt, and other countries around the world where the dollar is the global reserve currency. And so if the US is getting more in debt, other countries that are tied to that are getting weaker as well. And ultimately, we need a better solution. And so what makes Bitcoin special is it's uncopyable. Unlike digital files, Bitcoin cannot be duplicated. Its blockchain technology ensures each coin exists exactly once. That's it. That's the beauty of the blockchain. It's unprintable. No government or bank can create more Bitcoin. It's 21 million, and that's it. Mathematically enforced. It's inflation proof. Bitcoin's fixed supply schedule makes it immune to the debasement that plagues fiat currencies. So yeah, there's a little bit, more and more supply of Bitcoin that's being issued for sure. So we know that there is more supply, but there's only 21 million. There's about 450 being issued daily, and that's being gobbled up by the ETFs and gobbled up by the Bitcoin treasury companies. And it's always on. So when you take a look at the marketplace with Bitcoin, I mean, how do you compete with cryptocurrency that's on 24/7, 365? The traditional markets can't keep up. It's like the yabba dabba do Flintstone era compared to the rocket ship era with Elon Musk. There's no comparison. And so when you have it's kind of like when you have somebody who's always on working all the time, and you have somebody who's working half the time, the person who's always working is going to be more productive. So Bitcoin doesn't close for holidays or weekends. Look, it's a holiday today. Freaking things are closed, man, right? We want to get in the game and play, and everything's closed, right? So it's great to have a holiday, but you don't want your financial systems closing down, and financial systems are closing down. So, and it's borderless. You can send value to anyone, anywhere, anytime. So those are the features of why we love Bitcoin. It's good to be reminded of the fundamentals, and those are the fundamentals. And as you looked at Saylor talking about this in one of his talks recently, and if you looked at my presentation yesterday or the day before, I was talking about like where the economy is going, and eventually you'll have Apple stock and Google stock tokenized, and you'll be able to trade it and buy it 24/7, 365. That world's coming. So speed is the name of the game. The fast eat the slow. So you got 24/7 markets. Bitcoin never sleeps. You can trade at 3 a.m. on Christmas, per what Saylor says. Instant $1 billion moves. Saylor says it's the only asset you can buy or sell $1 billion worth of in 1 minute on Saturday night. And there's no boundaries, no gatekeepers. So that's why we love Bitcoin, and that's why we believe in strategy. And those are cool things. So you got Saylor here saying be free. He's sailing off somewhere. The Saylor's sailing off. Nice post. The Bitcoin therapist says, take a look at this graph on strategy, because there are actually people, he says, who are complaining about this chart and sold their stock. But this is the stock of the chart of strategy over the last 5 years. And if you look at the graph, look how vertical this graph is. It's insane, right? And this is with strategy at a $373 price point, which was the close the other day. So that's the graph. That's the 5 years. And over 5 years, you're looking at a 3,125% return. Now, obviously, if you didn't get in 5 years ago, that's not real for you. But again, at the same time, take a look at what the sentiment is now of where you think strategy is going to go. So even if one bought in at 373 or 330 or 380, and they're holding it at 400, and they're wondering where's strategy going to go, take a listen to my presentation if you're just joining me now, and go back through it, because Saylor talks about the fundamentals of Bitcoin. And a lot of what he's talking about here is the fundamentals of Bitcoin and the properties of it. And so if one believes in the fundamentals of Bitcoin, they would have greater reassurance in what strategy is doing. Doesn't mean that strategy is not going to have massive volatility, but that's the data, right? We got Bill in there. Richard, what's up, guys? How you guys doing? Paul in there. Hope you guys are doing well. This is a pretty cool quote by Chris. I think this is brilliant. Amazon scaled digital commerce. Apple scaled digital devices. Google scaled digital information. Facebook scaled digital relationships. Netflix scaled digital entertainment. Spotify scaled digital music. Strategy is scaling digital capital. Do you understand? That is a brilliant metaphor by Chris. Great job. And then Adam Livingston, Smarter Web Company, increases its Bitcoin holding by 43% in a single buy. This just shows more and more companies are buying Bitcoin, and more companies are getting in the game. More and more Bitcoin treasury companies. We're over 100. I'm sure we're going to be up to 200 in no time. And if you look at Bitcoin, this is from Bitcoin Magazine. Bitcoin is up over 574% since the 2022 bear market low. Okay. So that's a big bump from the bear market low. All of this, again, is relative. So I understand everybody's in a different situation of when they bought in. If you bought in recently, you're waiting for the run up and you want to hold it. Not financial advice, but I would be holding it over longer periods of time with Bitcoin and just feeling good about the sound principles of what I own. But somebody who bought strategy, years ago, I bought strategy a year and a half ago. So I've had the great profits of strategy, but somebody who's bought in later, they're having a different viewpoint. So it's all good to look at the past and performance, but you got to make your own decisions of, where you're at and what's good for you. And getting indoctrinated into the philosophy of Bitcoin and the philosophy of Saylor is good because it creates certainty. Elon Musk is launching a new app on investing and trading, which sounds pretty cool, right? Elon taking over the world. And this is another good quote graph from Chris Milas. This is also something that James from Invest Answers has posted before, where 1 in 100 no coiners understand Bitcoin. So if you look over here to the left, you got the no coiners, and like 1 in 100 actually understand Bitcoin. So when you're talking to your friend on the street and you're like, yo, that Bitcoin thing, and they don't own Bitcoin, they've heard of it, but they don't understand what it is. So I think it's important to understand the philosophy of Bitcoin, the philosophy that Saylor has about it, the philosophy of strategy and what they're doing, so that one can talk to people that they're friends with and just educate them and inform them of what is Bitcoin actually. Because look at the comprehension of what most people understand as it relates to Bitcoin who don't own it. And then when you look at the people who own Bitcoin, not a big percentage of people who own Bitcoin understand strategy. So even less people understand strategy. And, to sum up strategy is not that hard to understand if you just look at it of what it really is. I mean, it is a company that buys Bitcoin. And if one understands Bitcoin, they would be like, great, I understand Bitcoin. Bitcoin's really sound. I love it. So they understand Bitcoin. And then if they understand Bitcoin, then they have a chance to understand strategy. So then you look at strategy and go, what is strategy doing that's smart? They're buying Bitcoin. And then you would look at the other examples of companies all across the world that are also buying Bitcoin. So you're like, oh, Bitcoin, good. Strategy owns lots of Bitcoin. Many companies buying Bitcoin. So you would start to have a little bit more confidence in what strategy is doing by looking at companies that are doing it and buying Bitcoin and putting it in as their treasury. But then you would just boil it down to go strategies applying a very simple formula. They're going to acquire as much Bitcoin as possible. They're going to consistently buy as much as they can. And, they own 592,000 Bitcoin right now, and they do it through fixed instruments and also issuing stock. And so just like a normal company will issue stock, like Apple issues stock, when I talk to my brother and his wife and they get stock options in the company that they're at, they're getting stock. We have companies that issue stock all the time. The difference is that companies that issue stock, they'll issue stock and then they'll receive money for that stock. And then as they get the money for that stock to the general public, they put it on the market, people buy it, they collect the money. And then a typical company that does that, they'll go put it into their operations, R&D, other things to grow the company. And there will be a lag from the time they take that money and put it into research or put it into new developments or innovations. There'll be a lag by the time that becomes profitable. So they're diluting the shares as they're going out to actually raise more money for their company. And public companies do this all the time. So why can't strategy issue shares, dilute the shares, which is only a temporary dilution? Because if the rise in the Bitcoin, which it has been since strategy started doing, the rise in the Bitcoin is more accretive than the dilution, then this is a very sound, smart strategy. So the difference is a company that does this on the regular stock market that is not doing it, that is doing traditional types of moves, that company is just investing back in research and innovation and so forth. Strategy is taking the money and investing in Bitcoin. I don't know about you, but because I understand Bitcoin, I feel way more comfortable investing in strategy because I think it's a sounder game plan that they have. And it's simple. So on the equity side, it's very simple what they're doing in terms of common shares. It's simple. It's not difficult to understand. Right? It's like, well, how can you, how could strategy be worth more than the Bitcoin holdings that it has? I mean, this is what some of the people are saying that are shorting it. This is what Chanos is saying. Like, how they have $40 billion of Bitcoin and now it's worth $60 billion. How could you be valuing strategy at a 2x to its Bitcoin holdings? How? Well, I mean, you don't value traditional companies on the stock market. They're not just based on what they're currently doing, right? There's also looking into the future of what people think about the future of that company. And so people are willing to pay a premium for strategy because they understand it. And so that's why that's one of the reasons it's trading at a premium. 2, people understand that they're buying Bitcoin. So if one understands Bitcoin, like, this is great. 3, they have an ability to use leverage to acquire Bitcoin. So like I could go out and buy a Bitcoin, but strategy has intelligent ways to use leverage to acquire Bitcoin. And so while my Bitcoin might be worth worth 1 Bitcoin, they're able to leverage it. And by using leverage, they can turn up the velocity of what they're doing to acquire more Bitcoin. And they can acquire more than an average person who's just going to buy a Bitcoin. That's the power. How? They issue stock. They issue stock, they get money, they buy Bitcoin. Great. Convertible notes that they have. So when they issue a convertible note in the marketplace, what are they doing? Somebody's loaning them money and they're taking the money and they're buying Bitcoin. And on these convertible notes, most of them, they're not even paying out any interest on it. They're paying out 0% interest or sometimes very low interest on this. And then the person who's loaning them the money has the option to convert That's why it's called a convertible note, to convert that into shares in the future. So even there's huge amounts of leverage. It's like, I will give you $1 billion strategy. Here's $1 billion. Don't pay me any interest. You don't have to pay me any interest. I just want an option to convert in the stock into common shares at a later time. That's the deal. So that's leverage, right? That's leverage. So they're using intelligent leverage to acquire more Bitcoin. They're not just using their money. Sure, back in 2020, when he was sitting on a melting iceberg in his house in Miami, and he was watching his $500 million of his life's work in his company sit there in a freaking account that was earning 5%. And then when COVID hit and the Fed decided to just drop the interest rates, and the interest rates just dropped, he was looking at 500 million sitting in an account originally earning 5% that was now melting down to 2% and going to go down to 0. And so the option at that time was, let's take our money and let's go put it into Bitcoin. So that's taking their money and putting it into Bitcoin. But now what they're doing is they're not doing that. That's not their game plan. They're taking other people's money and putting it into Bitcoin. That's leverage. That's what the company's doing, right? So that's the brilliance of it. That's the brilliance of the company. And so it's not just happening through convertible notes, or it's not just happening through issuing common shares and issuing paper, right? Here's some paper, buy my paper, right? Buy my shares. I'll take your money and buy Bitcoin. They're not just doing that. Now they have preferred stock, which is more like fixed income instruments. That's all it is. If you think about it, preferred stocks pay a dividend. So it's literally the institutions want to give strategy money. They're like, here's $1 billion and just pay me out some fixed income. And that's basically, when you hear these different instruments of Stride and Strife and Strike, that's basically what they are. Okay. You can get into each one and you can look at them and break them down, what they are and how they're different. And there's differences between Strife and Stride. They're very similar. They both pay out about a 10%, depending on what you buy it at, what price you buy the preferred stock at, about a 10%. Stride has more flexibility because with Stride, they don't have to pay the dividend out every quarter. And if they don't pay the dividend out, it doesn't accumulate to where they have to pay out more later with Stride. With Strife, it's a different story. They can skip a dividend payment, but it accumulates and they'll have to pay it out later. So they've got these intelligent products that they've developed that are attracting fixed income investors. And so that's more leverage, you see, and that's more ways to acquire Bitcoin. So if one were to look at this and say that, strategy shouldn't be paying at a premium, based on what I laid out, it shouldn't be trading at a premium, and one shouldn't pay a premium for strategy stock. I don't believe that that's true. And clearly the market doesn't believe that it's true right now either. The market doesn't believe that it's true. Make sense? Because the market keeps paying for strategy stock at a premium. And if you look at a percentage, you have a percentage of people that are shorting the stock, but out of all the outstanding shares of strategy that exist right now, there's like 9 or 10% that are shorting it. And it's interesting too, because if you look at the chart I was sharing earlier, again, take this chart with a grain of salt, guys, but if you look at the chart I was sharing earlier about the different analysts, this is an article by Yahoo Finance, and it basically has 13 different Wall Street analysts, people from Morgan Stanley, JP Morgan, Barclay, Bank of America, and they have these different analysts that analyze the stock. But if you look at the different analysts, it's kind of interesting because in the current scenario to the right here, out of 13 analysts, 11 call it a strong buy currently, and 1 a moderate buy, and 1 a strong sell. So it's kind of interesting. 1 out of 13, that's like what, like 7%, 8% or something. So like 8% of the analysts think that it's a strong sell. The other 90-something% think it's a strong buy. And if you look at the market, I mean, this is just a coincidence, but if you look at the market the market in terms of who's shorting the stock, you have about 10% of the people who are shorting the outstanding shares. And I shouldn't say people, 10% of the outstanding shares are being shorted. Okay. So you got 10% that's betting against strategy, and you got 90% that's betting on strategy. So I think ultimately I think the future looks bright. So that's it. That's the weather and the sports today. I hope it served you. It's fascinating to see. Just to recap on what I went over today. Number one, we went over a presentation of just some principles that Saylor talks about as it relates to fiat currency. And we looked at fiat currency in the US dollar, the debasement of about 7%, maybe 6.5% per year on average over the last 100 years. We take a look at other fiat currencies in different countries where they have a larger debasement in different countries like Argentina, where it could be 28 to 30%. And so, you look around and fiat currency isn't strong. And all fiat means is decree. So by statement, it has value because we say it has value. That's decree. It's like, here's a statement. This is our statement to say that our money and currency has value because we say it has value, because these currencies aren't backed by anything. So you look at a currency that's not backed by anything, and people will say, well, Bitcoin's not backed by anything. But Bitcoin is a finite supply and your currency's printed all the time. So we talked about that today, number one. Number two, we talked about just the properties of Bitcoin. Number three, we talked about what different analysts have said about strategy recently, and how some analysts think that out of 13 analysts, there's a high prediction that strategy could rise 73% from here up to 650. And then there's kind of a in between when you around the 530 or 540 price point that it'll rise to. And then there's one person who's just bearish on it out of 13 in terms of the analysts. And these are Wall Street analysts. Again, take it with a grain of salt. Okay. I did research some of these organizations that do the research on MSTR, and they are using, they're using data points. So they're definitely digging into the data. How much they really know about it, I don't know, because I don't know them personally. Okay. But that's cool. And so during times like now where the markets are doing what they're doing, where it's a holiday right now, where the financial markets are closed, not the crypto markets, but the financial markets. And also, we've been chopping sideways and down with strategy. It's just important to look at the principles, zoom out, look at longer term time horizons as well, because that's what Saylor's talking about. Zoom out and all this short term, whatever, as you're looking out a long term towards years, or even if you were looking out now at months, like 6 months into the future, or 9 months in the future, you're zooming out to look at the longer term perspective and look at the principles that are guiding that versus just the choppy, crazy, political, wartime markets that exist. Okay. So there you have it. Hope it serves y'all. Hope you have a great rest of the day. If you like this content and stuff, comment down below. And hopefully my audio is fixed and coming through. So we're having challenges with it. I'm still trying to get it totally fixed, but hopefully this one worked out. I'll see you guys soon, and subscribe to the channel if you haven't. Share this with a friend, and I'll see you all very soon. Hope you have a great day.